Trading Market Technicals morning call video for Wednesday, August 28th. Red across the board on continued worries on the Syria conflict. Dow Jones down 170, Nasdaq down 79, S&P 500 down 26, and a Russell down 24. And it was actually very interesting to see. We ended up chopping around between 9:30 and about 11:30ish, and then right around 12:30, the markets just literally cracked that little support area and just started grinding lower pretty much most of the day. Now, I will tell you that the selling has been contained and controlled, so there really hasn't been much fear in the market. So that's something that's interesting to see if we are now coming into a buy zone area, our first target on this pullback, right around the 1628, 1630 in the S&P. So it's interesting to see if this market will get bid up. Now, we are a little bit extended, but if you look at some of the indicators, which I'm going to show you, there's still quite a bit of ways to go down, that we can literally test that round lot number 1600. So we'll see what happens in the coming weeks. Remember, we are in the end of the summer. There's a couple days left of the month, so the moves will be a little bit exaggerated, so keep that in mind. And volume has been extremely light, so I wouldn't basically run for the hills if you are a longer-term investor. I think that actually a little correction like this is healthy. And you know, they're worried about Syria, which is a very small country, and yes, it's a terrible tragedy what they have done to their citizens, but you know, if there's going to be any type of conflict, there may be, you know, quick airstrike or something like that, and I don't think much will be a full-blown war in Syria, at least at the moment anyway. But that's what the market is worried about, and that's where we've got continued selling for the last couple of days. Now, remember, we were looking for a pullback, and we were looking for a little bit of a bounce, and we did get it, but I thought we were going to get a little bit more of a bounce before we actually ended up starting to sell off again. I think we only saw a couple of days of a retracement rally, and then we sold off coming into this week, Monday and Tuesday. So we're going to see where this market takes us, and again, this is going to be very, very tricky, guys. We are again Wednesday, Thursday, and Friday at the end of the month, and Monday we're closed. So there may be a lot of people that are worried about taking positions into the weekend where we might get a continued flush of the markets. Okay, so I would be prepared for that and be nimble. You must be nimble in this market. If you have some good profits, take them. You know, not to worry about waiting for the market to come back your way again. That's not going to happen, especially now. We are getting into volatility, which I love to see. That means that's going to get us some great trading opportunity, and the markets are going to open up again, where we had virtually no volatility for months and months on end. So now we're coming into the seasonal time of weakness, which would bring us between now and somewhere in the first, second week of October. Again, it doesn't have to happen, but if history repeats itself, we're going to see some volatility. Now, it could be good volatility, too. Markets could be gyrating up and or down, but that's what you want to see in order to produce some nice profits. All right, let's go into our indicators. And what you see here is the bullish percent index. And like I said, this was the pullback we were looking for, right? But I was thinking it would take us more into the 1675-ish area, 1680, maybe even 1690. And that did not happen. And I had mentioned, watch this bullish percent. Once we get in, it usually kisses and will continue lower. And sure enough, that is exactly where we got. We're about 77% in here. So we still got plenty of room to run to the downside, okay? And remember, here is the June 24th lows. This could be absolutely attainable, especially if you have continued fear starting to creep into the markets. Take a look at the new lows, though. This is what's interesting. We have the New York Stock Exchange new 52-week lows were contained right underneath 100, whereas the last little sell-off we had, people were a little bit more worried, and sure enough, that marked a little bit of a bottom. So that means that we really didn't get any fear coming into this little sell-off that we had the last couple of days. So this could actually accelerate a little bit more to the downside. And this 1575 in the S&P cash, which is the 200 EMA, is definitely attainable, especially if you have this coincide nicely with the June 24th lows. So we really haven't seen a big spike of fear yet. Not that I want to see it, but I'm saying is that if we get a control move lower and we stayed contained in here, this tells me that this market's going to reverse at any given day. Now, if we get fear creeping in and we get a big washout, then you're going to get that big spike again into new lows. Okay. Here's the tick. The tick now starting to creep down below zero. End of day tick. Again, what I'm watching here, not much of trading, but I want to see if the breadth of the market, which is more part of our internals, if we start ticking below a zero and start staying below 100 and we go sideways to lower, that's not good. That's a bad sign that internals are starting to turn really bearish. Right now, we're still holding above zero, but it's something that I wanted to show you. Let's take a look at our trusty McClellan oscillator. Right now, this also tells me we're in neutral. Usually anything between negative 30 and plus 30, we're really in a neutral state here. But if we start breaking down, what this tells me, we have additional move to the downside. We have a lot of room here to go down and or up. So right now the trend is lower, so this tells me that we can move lower without being extremely oversold. Take a look at the VIX. And the VIX had a big spike up again here. Nice, again, a nice big long-legged doji. Okay, and we are outside this Bollinger Band. Let's see what happens if we climb back in it again, like we did here, and produce a little bit of a buy signal. Maybe we get a little buying pressure come in and shorts cover for a day or so before we continued our selling. So this is what I'm going to be watching at the close today. If the VIX can close back in the Bollinger Band, that'll give us a buy signal in the market. So we'll see what happens here. Now, if you look at the CBOE put call ratio, we have literally finally broke out of this range. So this actually closed bearish, plus 12 at a close of 102. So that means that people are starting to buy a little bit of protection here. All right, so we got a little bit of fear creeping into the market. Not much, but a little bit of fear, which is pretty amazing that we have a pretty decent sell-off. We had pretty much 5 out of 6 days down, a 2-day up, and then two big down days down. So just keep an eye on that. Now let's take a look at gold and oil, and this is going to be one of my couple favorites here. Now gold is at our sell target, sell area, if I should say, of the 14-16 area. Do we go out and sell gold right away? Absolutely not. I want to see this chop around, maybe even take gold might even spike higher, and that's I'd even prefer it to spike even higher. We have our RSI now reaching overbought territory. Our stochastics are extremely overbought. So this is a good area here where I'm going to be watching to short gold. Okay, now obviously if the fear trade continues, gold can continue to rise at least up to the 1500, and this would be a better spot for me, 1510 area, which would be the 200-day moving average. Of me looking to short gold. Okay, again, if the fear trade continues, then gold will not be a good short. So we want a trigger, meaning that we want a reversal candle, and we want to take out the previous day's low before we would even enter a gold short trade. Now let's take a look at USO. And USO here did really well. We broke out of this 38.50, and now we're coming into a resistance area of 39.5, and I'll show that to you in the other chart. But what I really would have preferred is the bullish percent ENER come back down to the 35 to the 50 area and then roll back up again. But if you looked at it, you see what happened. We did get a buy signal, but it looks like we're rolling back down again. So this is going to need a few more days before we enter a long trade in oil. But I do love oil to the upside. I just wish it would have been a little bit down here or even down at the 35.5 area. Let's take a look now into our charts. Now, the one thing I mentioned is the EEM, the emerging markets. They are getting pummeled. So this is not good for our markets as well. We want to see symmetry. We want to see all of the markets moving higher along with our markets, and that gives you a good, healthy market, a good bull market. Right now, we're selling off. Other markets are selling off, and that's putting pressure on equities. So that means that watch these EEM and see where this bottoms. It probably looks like we're right now at the 76.8% retracement from here to here. So this tells me that probably logical area is going to be this 36.15 area. If that does happen, then we want to look for a flush and then a reversal, and hopefully that would be the end of the correction. Okay, but this is really concerning to me, especially if you're a bull. And again, I think corrections are healthy. It's good for the market. It's something that it's needed in order to for the markets to go higher. Now, back to the USO. As you can see here, we're coming into a resistance zone. So 39, where we are now, and 39 and a half, 40 area is going to be big, big resistance. And this is why I said, now, we filled this gap, right, this resistance gap here. The gap area resistance is filled. We did break back out of it. Now, what I'd like to see is 2 or 3 days of consolidation, and then take out the highs of the consolidation, and then I'd be a buyer as well. Or after the gap fill, let it come back in, make that higher low from here, let's say, to here, and then I'd be a buyer in the zone area here for a move higher, okay? Where that retracement, where that pullback would stop, as long as it's a higher low from this pivotal low, then I'd be a buyer as well. So there's two ways to play it long. Consolidation to the upside, a breakout of the channel resistance once it consolidates, or the next higher low from this low. So that's what I'm going to be watching in the coming days and weeks and to put on a trade. Now, GLD. GLD came into a nice area of resistance. As you can see, volume zones here, big demand, big supply area here. And now a break above here, guys, if we do break higher, we are in a thin zone. Look at this area here, thin zone. So this means that it can flush to the target of 150.75, as you can see here, and that's where our inverted head and shoulders is. Especially now that you have some fear involved with the Syrian conflict, possible conflict, we could easily get to this 200-day moving average, and a break above that would get us an easy target of 150.75. So this target now doesn't seem too far out of reach. So use caution. I wouldn't short gold just yet. Let's let it prove itself that it wants to go lower. Right now, it's on its way up, and it's a good spot. It's a good chance that this could continue its move higher. Take a look at the S&P 500. We broke the 50. Next target's going to be 1617 in the S&P cash. That's a 61.8% retracement off the June 24th low to the high of 8.2 August 2nd. Okay, so just keep this in mind, guys. But we've came down pretty much, and we rallied for 2 days, and now we sold off down hard for 2 days. So now I wouldn't be looking for shorts here. So what would I be doing? I'd be looking for a bottom in the market and we would get a retracement rally where the shorts would come in and cover, and then we would reevaluate again and see where this market's headed. Remember, we are easily coming into a good 4 to 6 weeks of seasonal weakness, continued seasonal weakness. Now let's take a look at the S&P 500 on a 60-minute. We came into our first target at 1630. Next target is going to be the 1617, 1618 area, and then of course 16 would be the round lot number, and then the 78% retracement would be the 1596. Okay, so we do have a couple of downside targets here, target 2 and target 3, but keep an eye on it now. Let's see if we get a little bit of a rally. Now we are up about 4.5 in the S&P minis, the E-mini S&P and the electronic session, the overnight. So we did not get continued selling. So let's see if we get a couple of days of a bounce here. Okay, June 24th low. We are now entering the 50% retracement off the spiders. Again, a 61.8% retracement would be a good spot for a continued bounce, or at least a retracement up higher. Let's see where that takes us in the next couple of days. Here's the 30-minute S&P. We had the Bollinger Band starting to pinch, and sure enough, boom, we get another rally down. Another sell-off, another move lower. So now this will need to take a couple of days to contract its bands, and then let's see where this next move is going to take us. Here is the diamonds, and like I mentioned before, the diamonds here are weaker than the 5 of that we follow, and nice bear flag, break out of the bear flag, and now we're moving lower again. So June 24th low is only a couple, I'd say what, $1.50 away. Why not hit it? So this to me tells me that the Dow, the diamonds is definitely headed a little bit lower. Here is the IYT, and now with higher oil prices, this is what we have to factor in, guys. Right? If oil continues its run higher, okay, that's going to put pressure on equities and consumer discretionary, the transports. The airlines got pummeled yesterday on that move higher in oil, which obviously may continue weakness in the transport. So that's not going to look too pretty as well. So keep an eye on that, because if this starts to move lower, you're going to have to really, we're going to have to reevaluate the situation here, that we could actually get some really hard selling here in the coming weeks. Right now, it's contained. We are on this horizontal support line. We're holding up well, but if we start breaking this area here, next area is going to be the 200-day moving average, and that is not going to be pretty for equities if the transports really start to break down. Now, the IWMs, bear flag, we got that gap fill right to the penny, as you can see here. We had that doji star yesterday, and we really filled that gap to the penny on a bear flag, and now we are hitting this area. We broke the 50-day moving average, not good, and we are holding by a thread now the uptrend line from the November 2012 lows. So this is going to need to hold here. If it does not hold, we're going to look for the 2012. We're going to look for the June 24th low, which is going to coincide with the 200-day moving average, guys, and that's going to be a big flush. So that's something that we don't want to happen. But and then I think that if we get to this area here, I think you're going to have to start legging into a long trade in equities. But right now, unless it's a special situation, being long, or unless you're long from way back, that's another story. But just keep that in mind here for going forward. Here is the SMH. We had called the head and shoulders pattern here. We did break higher, and usually, and this is where I like the second break here, is the break back into a bear flag pattern. When you get that bear flag pattern, back testing that neckline, that's going to be the short that you break lower. But the thing is, with here, we gapped lower. All right, we didn't just trade lower. So now we're clinging to the November 2012 lows. Watch this here. We closed below it, but we could easily break back above it again. So let's keep an eye on the SMH. Look for the weakest semiconductor. We've been talking about this for weeks and weeks. If you are holding positions, the SMHs or the IGN, which is the networking, I had mentioned that. I showed you the networking sector here. Also a great sector, and I said, watch this, guys. Well, Cisco starting to break down, and sure enough, if you caught this short, you really could have made some real nice money in the networking sector in the IGN. Okay, let's take a look at Goldman. Goldman here could not break out of this bullish falling wedge. Actually, really got destroyed yesterday along with the banks. Take a look at the XLF. Can't hold that November 2012 uptrend line. Coming out of this bear flag pattern, broke lower. So the banks look like in trouble, which tells me there could be some continued weakness in equities. If the banks can't hold, semis can't hold, crude going higher, gold going higher, not looking too good. So this is something that it's a big concern, and we want a market to correct, but we don't want a big flush. I mean, it would be nice to correct. And right now, we're just correcting here. So the sell-off so far has been orderly, but let's see what happens going forward. Okay, Apple. I said if we didn't break the 504, which we did not break, which was Monday, we sold off. Look out for the low of 498. If we took out 498, we'd be testing this area here of this slanted horizontal support, which we did, and we are in it now. So we are above. We broke the 8, and we are now getting down to the 20. So watch this, guys. This could be a flush back down to the 200 over here. So right now, I wouldn't be, again, looking to be picking bottoms in Apple here. And let's let the market decide where it wants to do, and then let's go for a big flush. All right, guys, that's really it. Have a great day. I know it's a little bit long, but we had some good movement in the markets yesterday. But again, the sell-off in the afternoon was very orderly, which is a good sign, okay? A good bullish sign. Let's see what happens today and the rest of the week, and we'll talk to you tomorrow. Take care.